The local market finished up after the Dow closed above that psychological 13,000 milestone. Joining me now for his take on the day in the bourse is Martin Lakos from Macquarie Private Wealth. And Martin, that 13,000 for the first time, I think it's in nearly 4 years. The local market must have had something to celebrate.
Yeah, look, very much, Tiggy. You know, the Dow at 13,000, we last saw that in May 2008. But it really does show up the Australian market's performance over the last number of years. If you look back in the lows of the market through the worst of the Eurozone issues late last year in August, you know, the Dow was around 11,200. We were around 4,000. Since then, the Dow's rallied 15% or more, and we're up about 5%. So it's really showing the difference of the impact of things like the Aussie dollar, the better earnings growth that's coming through out of the United States, amongst other issues.
And
that
our
are headwinds.
market loves that, of course.
Yeah, look, very much so. Look, we're going to continue to coattail the US if it can move on from here. But your markets have run pretty hard through January and February. It may well be we need a bit of a breather.
Resource sector services company Worley Parsons has reported an 18% increase in profits, but it disappointed the market.
You know, a couple of elements of the result did disappoint. That 18% growth was good, but still below analysts' expectations. I think consensus was about 160 million and came in at 152. Cash flow was a bit weaker as well, which surprised a bit. There was pretty solid growth in the staff numbers, which is always a good, strong indicator out of Worley in terms of what they're winning on contract size as well. And they continued the guidance, which I think the market will like. The other thing about Worley, Tiki, is that its second half tends to be stronger and is about 60% of the full year's numbers. So we might see some downgrades on this first half, but a better result in the second half.
Amazing how many companies are a story of two halves.
Very much so.
Chemical giant Orica, though, has revealed the Newcastle ammonia plant closures will cost it $90 million pre-tax. Not much damage to the share price.
No, interestingly, the share price actually rallied nearly 1.5% on the back of that. It was more to the point that at the AGM, they had announced that they thought the cost would be around $50 million at that point in time. Having now announced the full cost, which is certainly above expectations, they're still saying the guidance is intact. So in other words, they're saying there's an extra $50 million of costs, but we're going to continue to make the same amount of money we thought we would do anyway. So obviously margins are improving for them, and there's an improving outlook for them coming out of the United States and Asia.
Martin Lakos, it's very nice to have you in the studio for a change. Thanks for joining us.
Thanks, T. Thanks for having me.